It is possible that we just witnessed what's called an exhaustion gap for S&P 500. I will explain exactly what I mean and why this is indeed concerning, and the levels to watch should the pullback unfold, which is actually quite likely, and I'll explain why. We will look at a recent trade example for Intel, a very strong trade. So if you opened it, very big congratulations to you. We will also look at the dollar and gold interplay as the dollar retests bear market levels. Gold and silver and precious metals could benefit either as a result if dollar fails here. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, May 1st, 2026. Today, technically speaking, is May Day, and since I was born in the former USSR, if you remember that place, we celebrated May Day all the time there. It was a big holiday. Not sure if it's being celebrated as much here, but if you are, congratulations. Don't forget to hit the like button, subscribe to this channel, share this video, even put a thumbs up into the comment section. This is what keeps this channel going. Thank you very much for all of the wonderful comments I've been getting. If you have any questions, also put it in the comments and I will try to get to them. If you're a subscriber, stay tuned. We'll be covering various securities such as various ETFs, large cap stocks, as well as a few speculative securities that kind of look interesting. For example, Organon, Neo, and NRX Pharma. NRX Pharma makes ketamine of all the of other things. In today's edition of members only videos. As always, I'll be using my proprietary Master Chart Trading price action indicators, which you can see on this chart, this green, blue, red, and yellow lines, and you can find out more about them by going to my website called Master Charts Trading and signing up there to get them on your chart. These indicators are available for this interface. Free TradingView account is always needed, and then sign up on my site. You actually get a 7-day trial, so you can try it out. Okay, let's get started. First of all, let's look at S&P 500. So we had a significant run up recently from the low in late March until today. That's about 15% run in just a few weeks. Very strong move, obviously. Now the important thing on this chart is to pay attention to the what's called gaps. So there's a few gaps here. One is giant gap between 7th and 8th of April. Is quite large. You can see it went from 6,600 to about 6,700. So it's a pretty significant gap, and it's unfilled, and as they say, market hates vacuum, so a pullback towards that level is quite likely. We just don't know exactly when. We could pull back immediately, or we could pull back later. Some of the gaps remain unfilled, as in, for example, this one right there. This is from June of 2025, and yet another gap, also pretty large one, from May of 2025. So yet they're not yet filled. So we are, there's no way to tell if we will fill the gaps immediately or they will be filled sometime later. Having said that, if we look at the current price action, we can see that there is a possibility that we are witnessing what's called an exhaustion gap. So what's an exhaustion gap? Exhaustion gap happens when the security gaps up at the very end of its trend, or uptrend or downtrend. We don't know if it's the end of a trend, but this move is quite significant. So if we say that this is the beginning of the move on 30th of March, and we're assuming that today is the end of the move on the 1st of May, then a pullback is quite likely. And again, several gaps. So there's actually a small partial gap here also between 16th and 17th, but not a big one. There's another gap right there, 13th, between 13th and 14th of April. So multiple gaps that we can see on this chart. The biggest one, of course, is the 7 to 8 April gap. So a pullback is cannot be ruled out, obviously, and especially if we look at the current price action, you can see that today's candlestick looks like a textbook shooting star candlestick. So we opened around the close, actually, because it's a small amount of red part of the real body of the candle. Throughout the day we went pretty high up, but the prices were rejected and we actually closed below the entry, so the candle ended up being red. So this certainly looks like what's called an exhaustion gap, and they occur when security moves strongly up or down, and at the very end it gaps, and this could be the end of this move and potential pullback. So potential pullback targets, several of them. Obvious one, of course, is this 7 to 8 April gap. So let's look at the same chart, but now we're going to be looking at the continuous security, basically futures, S&P 500 futures, but we're looking now at the 4-hour chart, so that we're looking at even more granular setup. So there is that 7 to 7th of April gap right there where I'm hovering. On this chart you can see that there is no gap because this is a continuous security. On this chart there is an obvious gap because this is only showing during United States sessions in New York City. So the continuous security does not show this gap, but we can see that this would be an area of where the stocks might pull back to. Of course, before they get there, there is also several other levels, like for example this green support resistance line, which is at around 7,100 rather, and then another level is at around 6,900 or so, which is the green and blue lines on the 4-hour chart. So remember, this is a 4-hour chart. Each time frame has its own lines, so we can actually go infinitely, in. Like here's, for example, 10-second run, 10 seconds. And so theoretically speaking, if you have a very quick computer and some sort of you can trade, let's say, either futures or you can trade S&P 500 ETF SPY, but use options. So for example, if I was trading this as a S&P 500 ETF SPY, I would sell it short where I'm hovering right there. Remember, this is a 10-second chart, so each candlestick is 10 seconds, so 6 of them is a minute, and you would have been successful because notice that it dropped towards new lows. So we sell short on close below the red line. We do the opposite. We buy on close when we see a close above the blue line when we're going up. So on this 4-hour chart, we can see several potential levels to watch. First one is obviously 7,100 or so, the second was 6,900 or so, and the third one is that gap area. So we're looking at somewhere around 66,000 to about 67 or 6,600 to about 6,700 on S&P 500. So we will be watching this very closely. Right now it certainly feels like an exhaustion gap, but then again, not a day goes by when I don't open the news such as Wall Street Journal or whatever other news source, and they always use the same word: unprecedented, unprecedented, unprecedented. So we're in unprecedented times, and obviously anything can happen at this point. Could we gap up at the same time, instead of going down? Absolutely. But, I'm just telling you what I see on this chart. And this, to me, this looks like an exhaustion gap. And this looks like a very nice target for a pullback somewhere around 7th to 8th of April. So additionally, if we do get a pullback, so notice where this blue support resistance line is right now. It is exactly in that gap area. So if we do pull back towards that gap area, we will hit the blue line, and by extension, when we hit the blue line, that would be a buying opportunity. And I had this already many times. You know, when we close above the blue line, that's a buying opportunity. So if we do pull back towards that area, and we're looking at about maybe 8.5% to 9% pullback, that would be a good buying opportunity at a relatively low risk. So this is what I'm wishing for, and let's see if it works. I wanted to give an example of a recent trade which was just blockbuster. So hopefully you did take it. I did actually take part of this trade, but I got stopped out relatively early, and unfortunately I missed this just giant move from April into May. So this is Intel. How did I know back in 2025 August that we're going to have a breakout for Intel? Notice that Intel was, you know, basically nobody cared about it since April of 2024, when it closed below this yellow support resistance line. Pretty much we've been just, you know, hitting the bottom basically. Something happened right there on 14th of August 2025, and suddenly we're seeing a breakout and a close above the blue support resistance line. Why did that happen? We don't know on this chart, but I'm sure if we go back, I'm sure we can find some sort of an event. But we don't really know what it is. So basically, I was able to enter like around September 4th, and I actually got a decent, you know, return, but obviously it wasn't as huge as if I just let it run. So moral of the story is, the more you sit in a position, the better. Try to avoid exiting positions prematurely. In this case, you know, a pretty obvious breakout occurred back in September of 2025, but there were more opportunities if you were willing to trade them. So for example, right there where I'm hovering in November 2025, there was opportunity. Why? Because we pulled back towards the blue support resistance line and then closed above it. That's all we really need to know. That's our signal to buy. Again, you can find out more about these charts, about these lines on my website. So there's another opportunity right before it just took off to the moon, and that was just on 30th of March, very recently. Same thing, we dipped, we made a low below the blue line and closed above it. That's our signal. So that's a very nice move. Hopefully you took all of those opportunities. If you did, congratulations. And I would probably continue holding it for now. It looks pretty good. Although there are gaps here, so anything can happen. Obviously, we could see a pullback. So taking some profits probably won't hurt. But then again, as I just said, sitting in the positions longer is better. Let's switch gears. We're currently looking at euro versus US dollar. So we're looking at some Forex action. So on this chart, technically speaking, euro versus US dollar, there was several buy signals just recently. However, I am reluctant to take these signals still, and I'll show you why. So here's dollar currency index. So dollar currency index, technically speaking, broke out into a new uptrend where I'm hovering on 30th of March. However, you can see that we've been we pulled back, and we've been retesting this red support resistance line now on 3, actually almost 4 occasions. I think we didn't quite touch it today, but we came pretty close. So if or when we close below this red support resistance line, that would be a beginning of a new bear market for the US dollar. It hasn't yet happened, so we're watching to see what happens. So right now we're very close to either reaffirming the bull market if we close above the blue line, which is at 99.1, or we will reaffirm a bear market if we close below 97.6. So very close trading range, and we can literally break in either way. this indecision sort of shows in the chart of gold as well. And yes, technically speaking, again, gold is in an uptrend, but if the dollar suddenly rallies, then gold will come under pressure because gold is divided by US dollar. So if this bottom part of this equation suddenly gets bigger, it'll pull this currency pair lower. So we're waiting for, to see which way this will break, and especially the dollar. So if we go up, most likely gold will be under pressure. If dollar goes down, then it's the opposite. So gold will and silver most likely will rally. Same goes for silver. Not really much difference, although bear market for silver is much closer. So silver is currently at $75. Bear market for silver is at 65. So if we close below 65, it would imply that we need to sell it short. The other thing that I was looking at is the USD versus JPY. So I wanted to show you some Japanese yen futures and why there is a possibility that actually we have bottomed. So maybe the bottom is in for Japanese yen. We're certainly very close to multi-decade lows. Didn't really break them. This is still multi-decade lows from July 2024. But we haven't yet broken down below them. But just the way this candlestick looks, this from the 30th of April, looks certainly like we're bottoming out. So if Japanese yen is a bellwether of the US dollar, then we could be expecting dollar to fail after all. So we will be watching Japanese yen. If it continues to appreciate, this is USD JPY, so if Japanese yen gets stronger, bigger, it will pull this currency pair lower, so US dollar will be losing. So we'll see where we get. Notice this previous two opportunities to buy the US dollar versus yen back on the 26th of January and another one on the 11th of February. So possibly we're looking at something similar, but if we break below this blue support resistance line, then we need to be aware that we could get to this red line at 149 for this currency pair, and that would imply bear market below the red line. Okay, that's it for this week's recap. Let me know in the comments what you think. Don't forget to hit the like button, share this video, make a comment such as thumbs up in the comment section. That would really appreciate your help with that. And then head over to MasterChartsTrading.com, click on sign up. So again, I have several products. I have trading indicators, which are these lines on the chart. They're available for this interface, TradingView.com. This TradingView.com interface is free. So once you sign up for this free interface, come back to my site, Master Charts Trading, sign up for the indicators, and then I will open the door for you on TradingView.com. Yes, it sounds convoluted, but that's the only way to do it. I am eventually going to convert these indicators to other platforms, such as NinjaTrader, such as Interactive Brokers, etc., but that would require some time. If you are not yet a subscriber, consider signing up for the newsletters. So newsletter covers various securities not covered in the general YouTube video. For example, this week we'll be covering lots of ETFs, large cap stocks, or speculative securities. So that's newsletter. And again, trading indicators and newsletter as a package, much better deal than individually. And you could get a nice discount for the entire year if you get a year ahead. So that's a 17% off or 2 months free. Of course, the monthly plans are also available. You get free 7-day trial with any of the plans, so you can sign up and try them out. That's it for this week's recap. Let me know if you have any questions. Thank you for watching and have another great trading week. Bye-bye.